Do you understand how to manage risk in the stock market, trading Forex, trading indexes, whatever the case, even on your equities? Do you have a system that manages your risk correctly so that you can become a profitable, if not at least a break-even trader instead of a losing trader? Today, I'm going to go to the charts and I'm going to show you my strategy for managing risk and how we make a profit by becoming a good loser, by actually learning to lose in the stock market. Can you believe that if you're a good loser, you can actually become more profitable in the stock market? In fact, if you're winning, it's more dangerous than if you're losing. Really important to note that winning in the stock market is really important. So we're going to show you on the charts today all about managing your risk. And then after we've looked at the charts, we'll talk a little bit about the emotions and the fear that come into play when you're actually trading in the markets. Whether you're trading Forex, whether you're trading indexes, really doesn't matter. And the point to mention here, guys, is we have to understand that trading is a 50-50 game. Trading is not, oh, you're going to get a system that's going to give you a 90% win rate. There is no such thing. It doesn't exist. A lot of guys out there will tell you that you can turn $100 into $1 million and they've got a system that will be a 90% successful system. And you know, at the end of the day, I've done a lot of research in my 30 years of trading. I've been trading for a long time and I've tried out a few different systems and I know how all the different systems work. You want to know how the moving average crossover works? I'll show you. You want to know Fibonacci? I'll show you. Ichimoku? I'll show you. I know those systems. I know how they work. Trading with an MACD, trading with an RSI, trading ICT, trading fair gap values, and all this BS. Guys, you are wasting your time. They're all the same. No matter what you do, the trades remain a 50-50 game. And actually, to become a 50-50 trader is immense. I've had friends or traders, I know traders, that have got a less than 30% success rate, sometimes a 20% success rate, but you know what? They make a huge profit. And do you know why? Because they've got a risk system in place. Because they trade in such a way that they make more in their wins and they lose less on the losses. It's not rocket science, it's just how it works. And the minute you can get your head around that, the minute you can get your emotions around the understanding of this, the sooner you will become a profitable trader. Now, I have had a lot of guys out there that have said to me, Rob, you need to show us on live trading and this, that, and the other. But there's no difference to me showing you here on a delayed chart how to trade or whether we show you live. And the fact of the matter is, I can actually show you better like this than I can actually show you live, because if I'm doing live trading, do you know what? It's all about me. It's all about, look how good I am. Look how much I can make on a trade. Look at my Lambos parked outside. Look at my big house and all this BS. It doesn't work like that, guys. That's not how it works. At the end of the day, this is about you. This is about you learning to trade without me being there, without me hanging around in the background. You need to know how to do this by yourself. So that's what I'm showing you today, is how to manage your risk and how to trade the proper way. But remember, trading is risky. 80% of traders lose money. In fact, if you're trading on lower time frames like 5-minute and 1-minute charts, 99% of traders lose money. And if you don't like losing money, you probably shouldn't be trading. And if you don't like risk, you probably shouldn't be trading. Learn how to trade on the higher time frames first. Let's say walk before you can run, because seriously, guys, I've seen so many beginner traders jump in on the 5-minute charts because someone told them that this is how they're going to make a fortune. And at the end of the day, they don't make that fortune. They actually lose that fortune because it's really, really difficult to trade on those time frames. You have to learn your profession. You can't become a doctor in a day. You can't become a car mechanic in a day. These things take years to learn, but we expect to just jump on the trading platform and understand it in seconds. And overnight, I'm a pro trader. Overnight, I can make so much money. Guys, I've been doing this for 30 years, and believe me, I've seen it all. And it's not an easy game to play with, especially when you can't get your emotions around it. Emotions are your biggest enemy in trading. That said, guys, while we're here, pop down to the description, get your free Forex book. I'm not asking you anything for it. It's there, it's in the description. It's also on my blog, the little secret blog, where I give you a trade of the day every single day. That trade of the day is just an idea. It's not trading advice. Just remember, guys, I don't give trading advice. I'm just giving you an idea. I'm just showing you how I trade so that you can copy the system. Try it out. See if it works. Go back on the trades on the blog and see for yourself, well, how many of them were successful. Usually about 50%, because that's how I trade. I normally win actually more than 50%, but I'm happy with a 50% success rate. rate because I know that I'm making a profit. Right, so let's go and have a look at the charts and let's show you how to manage your risk. So here we are, guys. At the moment we're on the Euro US dollar because when I made this, I put out a short trade of the day on the Euro US dollar, and this is a bit delayed. By the time you see this chart, it's going to be over. This trade will be null and void and gone, but it's live for me at the moment and it's gone really well. It's been quite a profitable trade and I'm quite chuffed about that. But here's the thing, guys. You would have taken this trade, and do you know what? Everyone was recommending that you go long on the Euro US dollar. In fact, they were recommending that the Euro US dollar was bullish this morning. And now that I look and I chose to go short, wow, my stop loss would have been just above this trend resistance. Now, a lot of guys have told me, it's old fashioned. You're old, that's all in the past. That stuff doesn't work anymore. And they're manipulating these systems and blah, 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 blah. Believe me, guys, I've heard it all. And you know what? The stock market never changes. It always remains a 50-50 game. It has never changed and it never will. There will always be all these fancy systems that come out and liquidity sweeps and heaven alone knows what else. But at the end of the day, it always remains one thing. It goes up and it goes down. And that's what it does. And if it's coming down in a bearish phase like this, it's down, up, down, up, down, up. And what do you see? Every single time it goes up, trend line, it goes down. Once it breaks this trend line, that's where your risk is. So you put your stop loss just a little bit above the high because there will be money lying around the high. So what you want to do is you want to keep your stop loss away from that money, which is just a little bit higher. And then you calculate how much you're prepared to lose. And that's what you put into the risk. If you're prepared to lose $100, then you put $100 between yourself and there, and then you work out how big your trade's going to be. How many points are you going to buy? Are you trading $100 a point, $200 a point, $10 a point, $1 a point? That you have to work out. You get many CFDs, you get many futures, you get all these big ones as well. It depends which instrument you've chosen and which instrument you're trading on and how low you can trade. But you can work out what kind of risk you want to trade on at any one time. So what you do is you put your stop loss there, and then you take profit down at the bottom here, which is most likely going to be a little bit higher than this major support. If you've watched my videos, you know that we take our levels, our support and resistance levels from the higher time frames, and then we go down to the lower time frames. Look, this is a 4-hour chart, and I like this particular chart on the 4-hour because it actually looks quite decent. So if you look at this particular trade, this would have been risk over here, profit down here. Now we're looking to take profit pretty soon because it's going to hit the support trend support level, but you can wait and see if it breaks through and goes down to the main support, because that's a really big red bar which is pointing downwards. Point is, if it comes to your stop loss, if it gets to your, let's say it's $100 stop loss, the point is you've got to take it. You've got to run with it. Now I've seen people say to me, Rob, do a replay, those replay things that you get, and do the trades on a replay and choose the trades and see what happens, like you can see there on the chart. But the trouble is, I know where this chart has been, where this chart's going, and all I'm going to do is I'm going to trade in this band because I know it's there. And it doesn't matter if we go all the way back. My brain has seen it, my brain knows that it's there, and I'm going to trade along those lines. What you got to do is trade from the end here. Where's it going to go next? None of us know. Absolutely none of us know where this is going to go next. We expect it's going to go a little bit further down, but we don't know. If you take this, yesterday there was a Fed meeting talking about interest rates, and there was a lot of hoo-ha around the interest rates yesterday. Are they going to cut the interest rates or not? They left them as they are and said they might cut them in September, or everyone believes that. And as I've said to you guys on the news, nobody knows what's going to happen or what they're going to say, except the people that are going to say it, and they're not supposed to be trading it, okay? Because otherwise it's insider trading. So you don't know what's going to come out in the news or what they're going to say. But what I can tell you guys is we're expecting interest rate cuts. So you thinking every time they're going to cut the interest rates, the stocks are going to go flying to the moon because that's great news. But what you don't understand is it's already priced in. It's already priced into the markets. So when you get kind of stagnant news, that's actually bad news because nothing happened, because everything was already priced in. You've got to understand that markets, people buy into markets on future value, not on today's value. And that's what you've got to look at. So now this particular trade on the US 500 has actually gone sort of upwards here through the resistance and turned this into a support. So this being a support now, it might come back to retest it and then go long again. If you went long again on this particular trade, let's say you took this trade out of here on a closed green candle. Remember, the candle must always close before you take the trade. Now let's say you take this as a long trade. Your stop loss needs to be down here. You have a problem here because the lows are down here, which is quite far down. So what I would do in this event, I would put it below the first bar here, somewhere in the middle of the second bar. I'd put the stop loss somewhere there. I just accept the fact that if it breaks below this, it's broken through, my trade is invalid, and an invalid trade is no good. Just get out, let it go, and it'll be a small loss. But if it goes up, you're looking at all this gain and you're making big money on your winners. When it goes past this mark here and breaks through there, you can add to the trade, double it up, move your stop loss up, and that's how you manage some risk. It's not that difficult. It's pretty simple. And believe me, guys, as old-fashioned as old as I am and as many years as I've been trading in this market, doesn't mean that these systems are outdated. They're not outdated. They'll always be the same. They'll never change. Trend lines have never changed as long as I've been in the market. Resistance and support levels have never changed as long as I've been in the market. And the way you trade them has never changed as long as I've been in the market. Somebody commented to me the other day that I should show you some automated systems, automated things that put your support and resistance in for you. Guys, if you don't do this yourself, you're wasting your time. You're relying on some algorithm to put your support and resistance in. And you know what? Not only do they put them in the wrong place often, they also put too many in and they confuse the hell out of you. Don't confuse yourself. Keep it simple. Draw a line in. That's your line in the sand. And then work out where your stop loss is going to be and work out what kind of profit you want to take from that trade. That's the rocket science behind it. Not complicated, pretty straightforward. So now that you've seen the chart and now that you know how you want to trade and how to manage your risk, how do you manage your emotions? My big question to you is, do you know how to manage those emotions? Do you know how to keep those emotions in check? Because what actually happens when you start losing is you tend to go into the market and you tend to look at how you can change your system. How can I now change my system because I'm losing in the stock market? What's going to happen next? Or you tweak the system that you've got because you're not happy with it. Or like I said in the charts, it's a system that the system's old-fashioned. It doesn't work anymore. It doesn't work anymore. How can it possibly work anymore? You know, in the 30 years that I've been trading, moving averages have never changed. Trend lines have never changed. Support and resistance has never ever changed. So what are you talking about, guys? It's always going to be the same. Keep it the same and keep it simple. It's all about what's up in here, your emotions. When you start winning, it's even worse, because when you're winning, you think, I'm winning, I can't lose, I'll just throw more money at this. And the minute you do that, the market's got a great ability to come back and bite you. Manage your risk and keep your emotions in check. If you bet $100, lose the $100 if it goes against you. Understand that that money is gone. It's invalid. The trade is no longer valid. Think of it that way. But if it goes into a win, don't get overexcited, but do try to add to your wins and try to see how far you can take them and make as much as you possibly can. Don't jump out of a win as soon as you're in a win, because that's another thing that we tend to do. We see we're in a win and we're like, oh, let's quickly take that money, and you get out, rather than waiting for it to make a lot more money for you. So in other words, if it doesn't start making a lot of money quickly, you're sort of worried that you're going to lose that money that you've already made, and then you try and sell out of it. But then it makes more money and you think, well, why didn't I stay in that trade? And that's because your head told you that you wanted that little profit. And you'll justify it by saying, profit's a profit nonetheless. Not true. Not true. You want to make as much profit as possible so that you can cover those little losses that you might take. You might be a 30% trader instead of a 50% trader. Then you really need to make bigger wins. So you've got to get your head around the fact that you don't want to add to your losses, you want to add to your wins. But guys, that's me for now. And until Monday, I think it's Friday. So until Monday, next video. Oh, I might bring one out over the weekend on a stock if anybody's requested a stock. Otherwise, maybe not. Let's see how we go. Thanks for watching this video. Don't forget to watch the next one on Monday. It's gonna be a lovely story. Thanks for watching. Cheers, guys. Till next time.